Okay, so welcome back, guys. Today we're going to be taking a look at how to place your very first trade in the Forex or the futures market. I'm going to try to keep things very simple here, just so that you guys can follow along and, hopefully you learn from this. Once again, everything that is published on my channel is for informational or entertainment purposes only. If you need help with your investments, make sure that you consult your financial advisor. And with that said, I guess let's get started. Okay, so we're going to start with the Forex market. As I said, I'm going to try to make this very quick here, just so that you guys don't have to sit through a long video. So we're going to start with the Forex market and then move on to the futures. So we are on the Euro USD currency pair. And you can see we have a red button and a blue button. Red button basically is to sell, blue is to buy. If you don't see these buttons, go to the bottom right under where it has the time. It's just above the time. There's a gear icon. Click on that. Click on more settings. Click on trading. And make sure that you have the buy or sell buttons checked. Okay, so that will turn it on. Also, you may want to turn on positions and orders. There is a check box here. Just make sure you check that. And you'll see the reason why. So what we're going to do is we're actually going to buy. I'm going to show you the market is currently open. You can see it's actually showing the time here and it is moving. So we're going to buy. I'm going to click on the buy button and you have two different kinds of ways that you can enter. There's a market order where basically if I put in my value here, okay, so let's just say I want my stop. Okay, so very important that you have a stop loss. So if I want my stop loss to be, let's just say 1.15. So I don't want the market to drop to 1.15. If it does, then it will take me out of the trade. So what I do is where it says stop loss price here, I'm going to change this to 1.1. Let's see, 1.15. Okay, so I'm going to change that. And then you see where it has risk here. If you click on the pull down menu, you can actually put in the amount. Okay, so basically if it drops down to 1.15, how much am I willing to risk? Let's just put, I don't know, let's just put $100. Okay, so that's $100, 1.15. And then when I click on buy, it's going to execute the order and it's going to place my stop over here. Okay, so there we go. And you can see with the Forex market, generally there's a lot of slippage or commission fees, which is why I don't really like the Forex market because it depends on the broker that you have. The amount of commission fees may vary. And once I executed the trade, notice how it has negative 12.15. That means we are in the negative. Okay, so if it drops all the way down to this line, which is the stop, I'm going to lose $100. And you will see it in the dashboard here by positions. Okay, so you can see a negative 12.71. Now, if you want to adjust the stop, there's two ways you can do it that I'm aware of. You can take this and you can just drag it. Okay, so you could do that and then you make sure that you confirm. Or you could also, where the dash is at the bottom here, if you click on the pencil, which is basically to edit, if you click on that, you can, so this screen pops up here, or this pop-up on the right side, just turn it to, I'm going to turn it to back to where we were before, and then just confirm. So you put in the price, it's just more accurate that way, okay? But if you, you don't want to be too accurate and you just want to use the drag down, you can do that as well. Now, I could also set the take profit. So you see TP here, and I could move that. For example, I could move it over here, okay, and then just confirm. Okay, so basically what that means is if price were to go all the way up here, it will close the trade and I will end up making $232.59. So this is how you execute a market order. Okay, so just remember, market order allows you to enter the trade straight away, but obviously in this case you can see we are negative because you have the commission fees. So generally I tend to prefer the limit orders because you get filled a lot better. What that typically means is the commission fees won't be as high. You don't have all that slippage, which I'm going to show in a bit. So if you want to close this trade, there's two ways you can do it. So the X on this bar, or whatever you want to call it, if you click on it, it's going to close the position. Or if you hover your mouse, you can see it says close. Or if you're by the dash here at the bottom, you can click on the X and it will just close the trade. Okay, so if I close a trade here, it's going to prompt just close a position. And if I go to like the balance here, or you can see it in realized P&L, you can see we lost $27.07. And that is in US dollars. Again, this is on the paper trade account. And now what I'm going to show you is how to do a limit order. So what is the difference between this one? So the limit order, what I can do is if I go to, okay, so we're going to do $100 here, but I have to put in a couple of things. So what I'm doing here, okay, so I'm going to move my stop, or if you want, you can just type it out. So we're going to do the exact same stop, okay, over there. And then what I'm doing with the limit order is I'm going to move this line here. So we're going to put it, let's put it over here. Okay, so because it looks like the candle is going to drop down a bit, but I want to do this quickly here. So we're going to put buy. And notice how we're not in the trade. Okay, so what this basically means is we're going to wait until the market drops down, and when it gets to this blue line, that is when it's going to enter me into the trade. Okay, so we could move it a little bit closer here just so that I can show you what it does. Okay, and you can see it says 109 now because I adjusted my entry. I'm hoping this kind of drops suddenly, and then it will enter me into the trade so that you can see it live, you know, what happens. I'm tempted to move it up a bit. Let's just move that up. Okay, so I'm gonna, oh, I should have left it. Okay, I put it over there. Let's see if it drops down, because I'm hoping it drops down and then it gets me into the trade, and then we push up. Okay, let's do it over there. Let's see. We'll just wait. I think it's going to drop. It's so close. It's like a hairline. Come on, drop. There we go. Did it not drop? Hold on. It should be buying. Oh, wait. Oh, there we go. There was a bit of a delay. I was like wondering what was going on. So yeah, we were in the negative. That is the commission fees. But notice how it triggered. Okay, so it dropped. It took a while. I think it's because we're also on the paper trade account. There might be some lag. And then once you're in the trade, you can always adjust your stop. Okay, so remember, I can always drag this. Make sure that you confirm though. You can always do that. Or I could adjust it by going to the pencil here in the dashboard. The bottom. Okay, so you click on that. And then you can make sure that your stop, make sure you turn this on, and then just put your price. If you want it to be 1.15, okay, so that is 1.15, and it will actually tell you, in this case, how much you will lose if price were to drop down to this level. And if you want, you can always, the take profit, you can always do that, and then just confirm. What that basically means is if price were to go all the way to the top here, you'll end up making 191, and it'll take you out of the market. Okay, so that is the market order and the limit order. I don't think I need to go beyond that. I think it's really important, though, that you learn both because it really depends on what happens in the market. Sometimes you need to do a market order if things are moving really fast. Although I still think, practicing limit orders is better. The main thing is, as far as the important tabs when it comes to buying and selling for the Forex market, when you are clicking on the market, this tab here, click on the pull down menu and you can choose between using US dollar for the risk, or if you know your unit size, you can do that as well. For me personally, I don't like using the percent balance or balance rather. I tend to focus mostly on the US dollar, like the dollar amount. It's just easier to kind of keep track of things. Okay, so that's how you do it for the Forex market. So I'm going to close this trade. So again, if I close the trade, you'll see it has now shown that we are down $45.77. And that is the Forex market. Now, the futures market is very similar. It pretty much is the same. The only difference is, so I don't know if you guys caught. So when it comes to Forex, let me just execute a trade here quick. Okay, because with the Forex market, what you will find if you aren't using the risk US dollar, it's going to show it in units. The difference between Forex and futures is that with Forex, you get what they call fractional. Okay, so for example, let's just say I wanted this distance, okay, from the top line to the bottom line. I wanted that to be equivalent to, like, say, $50. You can do that in the Forex market. Or if you want it to be $100 or $1,000, you can change your sizing to reflect whatever it is, the range. Okay, so if I wanted this range to be equivalent to $50, $100, $10,000, $50,000 or whatever, you can do that in the Forex market. Now, in the futures market, you can't really do that because the distance between, like, from this level to this level, it's going to depend on which contract size you use for the futures market. Okay, so the futures market, they have what they call a mini contract, which is the more expensive contract. And then you have the micro contract, which is the cheaper version. Okay, so it's going to depend on which contract you trade. So what I'm going to do, let me just see if we have I'm going to go to, so NQ is basically the NASDAQ. This is the futures market. And I'm going to show you right now what the difference is. So we're going to do the same thing here. Okay, so you have buy and sell. So we're going to click on that. And then you can see we have market, we have limit, everything is the same, but you're going to notice, so risk, look at this. So 1 unit, well, I'm going to actually put my stop here. Let me see. Where can we put our stop? We'll do 28,700. Okay, so let me just change this. And notice how, so if I traded 1 unit and I put my stop at 28,700, if it were to drop down here, I will end up losing 5,710. Okay, so the value changes with the futures, and this is for the mini. The micro, which would be MNQ, the ticker, will actually be less because the value per tick is less. Okay, but it's basically the same thing. Okay, so if I wanted to, buy here, so this is going to be the market order. I'm just going to click buy. And if I move my stop over there, so if it were to drop down here, I will end up losing 4,115, paper money or fake money, if you will. Okay, so you can see the difference, and you can't change this value either. Okay, the only way you can change it is by trading the micro contract of NASDAQ, which is MNQ. You can see we are using NQ here, the top left. Okay, so if I wanted to change the value, what I would do, let me just close this. This is where futures differs from Forex. So if I do MNQ, micro, and you can always Google the contracts, like if you are trading futures. So I'm going to actually add this. Let me just move this up here so that you can see the difference. Okay, so it's the exact same chart. The only difference is if I were to trade 1 unit, so I'm going to buy now, look at what happens. Notice the value of the contract. It's a lot less, but you only have 2 choices with the futures. You have either the mini or you have the micro. With Forex, it's a bit different. Okay, so Forex, you can change the value, of that range, if you will. So that, I think, is the biggest difference between Forex and futures. But the way that you execute the trade, it's all the same. Okay, so in this case, we are trading 1 unit. if I close this and I do the limit order, like I showed you guys how I did the Forex, example. So we're going to do the same thing now, but we're going to use the futures. Okay, so this is where I want to enter. We're going to put our stop there, and we'll put maybe our take profit over here. I'm going to buy. And when this triggers here, you'll see the trade pop up. So hopefully it moves. It's kind of, is it going to trigger? That's kind of close. I think it's going to trigger. I'm just waiting for it to trigger. It will show up at the bottom when it does. I'm just waiting for this to kind of nudge down a bit, and then it should. There we go. Okay, you see? So now it has entered us into the trade, and it has placed our stop here. And there is our take profit. And you can always adjust things either, on the chart itself, or you can use the edit, the pencil tool over here, and you can always adjust. So where you want to exit, where your stop loss is, you can change all of that, either way. And, that's pretty much it. I mean, I don't think I need to change or at least explain anything else. It's pretty straightforward. I try to keep this as short as possible. That is the difference between the Forex and the futures market. I hope this was able to help you guys as far as placing your very first trade. And if you aren't sure whether you're in profit or not, you can always see your dashboard here. Okay, so from the examples we did today, I ended up making $257. But I kind of lucked out when I was trading the NQ futures chart. But anyways, I just wanted to kind of show you. This is how you place a trade, guys. If you have any other questions, please feel free to post it in the comment section. And hopefully there's other more experienced traders out there that can help you out. And that's pretty much it. So I hope you guys enjoyed this video. If you did, make sure to hit that thumbs up. And also subscribe if you haven't already. You find these videos helpful. And yeah, that's pretty much it. So until the next video, guys, I will catch you guys later.